Hello, everyone. Thank you so much for joining me on my channel. My name is Vays, and I felt that the recent Congress hearings about the potential of Bitcoin being money did not have some of the best answers that the congressman should walk away with. So I wanted to do this video in order to provide my answers to the questions that the senators gave in that hearing. So without further ado, let's go ahead and play what the senators were asking the panelists, and I will try to answer those questions instead.
The committee will come to order. Without objection, the chair is authorized to declare a recess of the committee at any time, and all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. This hearing is entitled "The Future of Money, Digital Currency." I now recognize myself for 5 minutes to give an opening statement. Today, we will discuss the future of money and how digital currency may feature in it. When discussing the future of money, it is pertinent to have a firm understanding of its defining characteristics and history. Economists define money as anything that acts as a store of value, a unit of account, and a medium of exchange. Various objects have been used as money, such as seashells, giant stone tablets, and cigarettes in prisoner of war camps. Commodities such as furs, rice, whiskey, tobacco, and corresponding warehouse receipts circulated as money on the American continent in the colonial period. Prior to America's independence, Americans imported gold and silver coins from European countries to use in trade, and the colonies issued their own specie before they and the Continental Congress began experimenting with paper money. Even the US dollar has evolved since it was declared the standard unit of currency with the passage of the Coinage Act in 1792. It has undergone changes in dimensions, design, denominations, issuer, and backing, notably with the implementation and subsequent abandonment of the gold standard. In recent decades, money has been electronically stored in bank deposits and transferred with credit cards, mobile phones, and the internet. Cryptocurrency, however, was designed to be something different. Cryptocurrency allows users to potentially store value unlinked from fiat currency on a decentralized ledger and securely transact directly from person to person across a peer-to-peer network of computers apart from a commercial or central bank. The central question before us today is this: are digital currencies simply a new way to hold and transfer value that will have a limited impact and niche appeal, or will it, or derivative of it, have a far-reaching transformative effect that will change our economy forever? Cryptocurrency has existed for a decade, since the appearance of Bitcoin in 2009. It has flown under the radar for most of its history. For years after its creation, it was worth little, had few users, and garnered sparse mainstream media attention. However, the media and consumers have been taking note. With a stark rise in value in 2017, Bitcoin grabbed headlines as it reached a valuation of around $20,000 US last December. Also reported are controversies such as Bitcoin's involvement in purchases on the online black market, the Silk Road, and donations funding WikiLeaks, the theft of hundreds of thousands of Bitcoins from the exchange Mt. Gox, and reports that hackers have stolen $1.6 billion from cryptocurrency accounts over the last 7 years. Congress must pay close attention to the developments in this space. The Capital Markets Securities and Investment Subcommittee held a hearing examining the cryptocurrencies and initial coin offering markets in March of this year, and the Terrorism and Illicit Finance Subcommittee held a hearing to discuss illicit use of virtual currency and the law enforcement response last month. As chairman of the Monetary Policy and Trade Subcommittee, I am particularly interested in any impact digital currency may have on monetary policy and the international financial system. We will discuss its use both in the United States and abroad. Thus far, some countries like Vietnam and China have banned or restricted it altogether. Others, such as Switzerland and Malta, have fostered it with a mostly hands-off approach and regulatory guidance. And others have adopted it, including Tunisia and Ecuador, by issuing their own central bank digital currencies. How ought the United States government approach this new technology is of great importance. Some believe, as former Fed Chairman Ben Bernanke highlighted in a 2013 letter to Congress, that digital currency innovations, quote, may hold long-term promise, particularly if the innovations promote a faster, more secure, and more efficient payment system, unquote. Some have suggested that cryptocurrency may be a catalyst for the elimination of physical currency and a foundation for a move to a purely cashless society. Others say that cryptocurrencies are not suitable replacements for coins and banknotes, such as European Central Bank Executive Board member Benoit Coe and the chair of the Bank for International Settlements Market Committee, Jacqueline Lowe, who in a joint article in the Financial Times entitled "Bitcoin Not the Answer to a Cashless Society," called cryptocurrencies, quote, something of a mirage, unquote. Cryptocurrency has attracted advocates, critics, skeptics, entrepreneurs, investors, and attention from media, government agencies, and law enforcement. Today, there are well over 1,000 different cryptocurrencies with various characteristics, together comprising over $250 billion of total market capitalization. Will cryptocurrency be the future of money? Are they in a bubble that will burst, or even just a passing fad? These are the sorts of questions we will attempt to address today with our witnesses. The chair now recognizes Mr. Foster for 5 minutes for an opening statement.
Thank you, Mr. Chairman, and thank you to our witnesses. I'll be brief because I am actually very interested in this topic, have been for a while. I look forward to the testimony of the witnesses and hope to hear about currencies that are not only pure crypto, but asset-backed crypto and potentially digital fiat currencies, and most significantly, digital fiat currencies. I'm concerned that if a significant central bank could issue a digital currency, that it would have the potential to supplant the United States dollar for many transactions and even as the reserve currency around the world. And despite the reports that they're exploring it, countries like Russia or Venezuela are not really credible economies that could issue fiat currencies that would supplant the dollar. But if, however, the ECB were to issue digital euros, then I think the entire world would very rapidly adopt that for many digital transactions, which would have benefits to consumers and a number of risks associated with that as well. And if there is really a credible threat that a digital foreign currency would supplant the dollar, we have to be prepared to respond to that threat. I look forward to hearing from witnesses on the economic feasibility of another currency supplanting the dollar and whether digitization could be a catalyst in such a transition. I also look forward to any thoughts the witnesses might have on some of the decision points that have to be made when you decide to create, for example, a fiat currency. The currencies could be traceable or not. They could be traceable only with a court order. Whether or not trades could be busted in the same sense that a credit card purchase can be broken if you convince some entity that the transaction was fraudulent. And who makes that call, under what circumstances? These are what I see the really important decisions that cannot be evaded when we design a digital currency. And so the issue of anonymity is really crucial and at the heart of this, as well as what sort of authentication a person will have to present to transact that anything. So I look forward to this hearing very much and yield back.
Gentleman yields back, and the chair recognizes for the remainder of the time, Mr. Sherman for an opening statement. 2.5 minutes.
Thank you. Blockchain is a good technology, but it can be used to track and transfer sovereign currency. There is nothing that can be done with cryptocurrency that cannot be done with sovereign currency that is meritorious and helpful to society. The role of the US dollar in the international financial system is a critical component of US power. It brought Iran to the negotiating table, and then we argue about whether we got a good enough deal or not in the JCPOA. We would have nothing had it not been for the role of the dollar. We should prohibit US persons from buying or mining cryptocurrencies. Mining alone uses electricity, which takes away from other needs and or adds to the carbon footprint. As a medium of exchange, cryptocurrency accomplishes nothing except facilitating narcotics trafficking, terrorism, and tax evasion. Some of its supporters delight in that, that if you can disempower the U.S. government from being able to prevent terrorism, narcotics trafficking, and tax evasion, you have somehow struck a blow for liberty. That is reason enough to ban it. But its role as an investment is at least as bad. We have certain animal spirits in our culture, a willingness to take a risk, to place a bet. This can be harnessed by gambling casinos, which at least pay very high local taxes and created a city of Las Vegas out of a desert. We can better yet harness those animal spirits to get people to invest in risky stocks, startup enterprises, and provide the technologies and jobs of the future. Or we can see those animal spirits spent doing nothing but helping create a market for tax evaders, narco-terrorists, and others who find that the US dollar is not to their liking. At a very minimum, we need investor protection if we're going to have people invest in cryptocurrencies, and crypto offering memoranda and crypto registrations would be considered outright fraud and reason for incarceration if they were issued by somebody selling stocks, bonds, or any other investment. And finally, there is seigniorage, the money that we make as a country because we're the reserve currency, because we can issue a greenback that does not yield interest. There are people who are alive today because of the profits the US government makes on that, whether it be to fund defense or medical research. All of that gets diminished with cryptocurrency. I yield back.
Gentlemen's time has expired. Each of you will be recognized for 5 minutes to give an oral presentation of your testimony. Without objection, each of your written statements will be made part of the record.
Thank you so much, Chairman Barr, Professor Foster, and Mr. Sherman for inviting us here today to testify. I would first like to explain Bitcoin and cryptocurrency. There is a big difference between Bitcoin and other cryptocurrencies, but the three biggest functions that Bitcoin provides the world is one, it creates a stable money supply, a finite money supply, and just like gold used to be. The book Bitcoin Standard by Seyfuddin Ammous is an excellent resource for more details on it, but it does take us back to what is money. And Bitcoin and its properties give it that finite supply, just like gold, and even perhaps better than gold, because we know exactly how much new Bitcoin is being created, at what rate, and we know that this property is virtually impossible to change, so we do now have a stable money supply. The second property that cryptocurrencies, but specifically Bitcoin, gives us is this unconfiscatable store of value. Now, some people may not find that important, but historically, governments and other entities tend to have the ability to confiscate other people's property. Here in the US, this happened in the 1930s when gold was declared illegal to be held, and anyone that held gold, which at the time was mostly held by banks, but some people did have them in safety deposit boxes, all of that was now subject to government confiscation. More recently, we saw this take place in Cyprus, which is part of the Eurozone, where anyone that had over 100,000 euros in their bank account saw that money confiscated to the tune of almost 50% above 100,000 euros. Being able to hold Bitcoin by yourself eliminates that ability of confiscation. And the third property of cryptocurrencies, especially Bitcoin, is the ability to transfer it without any censorship resistance as peer-to-peer. In reality, this may not be the most common feature, but some people would prefer a method where they can very simply transfer their value to another person or another entity without the need of going through a middleman. These properties of transfer are not always cheap. They're not always quick. They're not always private or anonymous, but that technology will evolve slowly going forward. To answer whether you should pay attention to Bitcoin or the cryptocurrency sector in general, from the perspective of money, from the perspective of can cryptocurrencies displace the US dollar or lesser currencies, the answer is only Bitcoin has the potential to do that. It is the only one that is decentralized. It is the only one that has earned the confidence from the general public to be secure. And it's the only one that could seriously be considered a store of value. Several copycats of Bitcoin that came about in similar ways were still created by a known person, are still being promoted by known entities, and they are not as secure. And those alternatives can probably be regulated out of existence. Beyond that, we have these for-profit cryptocurrencies. These are attempts to be a cryptocurrency, but as a for-profit venture where the founders of that private currency are just looking to get rich as they attempt to make that a global currency. Again, they are very highly centralized, and you can certainly have effect with legislation. The final aspect is the ICO and utility tokens, but they are not, they would be terrible uses as a cryptocurrency or a medium of exchange, though their creators do imply that they could be. And again, those are very centralized and completely subject to regulation. Bitcoin is a little bit different. As I can mention one last thing briefly, to be more specific on those animal spirits of gambling. Again, a lot of people don't necessarily like to be told how they would like to spend their money, whether they want to trade or gamble or any other forms of voluntary contracts without any victims. And it's Congress's job to provide that freedom to the public and allow them to make their decisions in those cases. Thank you.
Thank you. Dr. Norbert Michel, you're now recognized for 5 minutes.
Chairman Barr, Rep. Foster, members of the committee, thank you for the opportunity to testify today. My name is Norbert Michel. I'm the director of the Center for Data Analysis at the Heritage Foundation, and the views that I express today are my own. They should not be construed as representing any official position of the Heritage Foundation. Cryptocurrencies have rapidly expanded since the introduction of Bitcoin in 2008. Their underlying technology, a distributed database that allows digital assets to be transferred without a third-party intermediary, holds the potential to transform the financial industry. This innovation should be fostered, not smothered. My remarks today will provide 4 specific points relating to the use of cryptocurrencies, cash, and other alternative forms of money. First, electronic means of payment have become more widespread as technology has changed, but paper currency, cash, is still a widely used form of payment. The demise of cash has been widely and steadily predicted since at least the 1970s, yet it remains a preferred method of payment for many people. Federal Reserve reports show that cash is still the most frequently used form of payment in the US, and that it plays a dominant role for small value transactions. It also remains the leading payment instrument for expenditure categories such as person-to-person gift transfers, food and personal care supplies, and entertainment and transportation expenditures. As the charts in my written testimonies show, both the volume and value of currency in circulation in denominations including all the way from $1 to $100 bills have steadily increased since the 1990s. That's increased. So retail establishments that prohibit customers from using cash, as was recently reported in a Washington Post story, do so at their own peril. But this danger, this threat of consumers using an alternative form of payment, possibly at an alternative place of business, is exactly as it should be. Competitive processes should take place so that businesses and consumers can discover the best means of payment. The fact that cryptocurrency is a new option for making payments, though it is in its infant stages, should be embraced. That brings me to my second point, which is that the federal government should not step in and tilt the playing field. It should treat cryptocurrency and all other forms of money neutrally. This means that it should not bestow any particular legal advantage on any particular alternative form of money, and that it should remove all legal barriers to using alternative forms of money. Removing capital gains taxes from purchases with alternative currencies, including cryptocurrencies and foreign currencies, would be a major step towards leveling that playing field between alternative forms of payment. To further level the playing field, Congress should even consider allowing the U.S. Postal Service and other government agencies to accept these alternatives. My third point is that these competitive forces are the forces that push entrepreneurs to innovate and improve products specifically to satisfy their customers. They also expose weaknesses and inefficiencies in existing products. These same competitive forces can and should be used to improve money. The federal government's partial monopoly on money limits the extent to which competitive processes can strengthen money and exposes our money to the mistakes of a single government entity. Nothing can provide as powerful a check against the federal debasement of money as the threat of competition from viable alternative forms of payment. My final point is that centralizing cryptocurrencies within any government agency makes little sense. The technology promises potential benefits because of its decentralized nature. Centralizing the technology at a central bank offers no particular advantage over a more traditional electronic database. Furthermore, Congress and the administration should do all they possibly can to ensure that our central bank never offers retail bank accounts to the public, whether via a central bank-backed cryptocurrency or via a more traditional digital form of money. Implementing such a policy would give the federal government a complete monopoly of money and effectively nationalize all private credit markets. No private entity would be able to compete with the federal government for funds. Even Ken Rogoff, a staunch advocate for phasing out cash and forcing people to use only one type of digital money, admits that the biggest threat to the value of currency is often the government itself. That Rogoff quote is, quite frankly, an understatement. Giving the federal government the power to directly take money from its citizens with a few computer keystrokes in the name of some vague goal of stabilizing the economy simply amounts to the death of economic freedom. It's a terrible idea, and it's Congress's duty to protect Americans from those sorts of tyrannical acts. Thank you.
Yeah, that was a great opening statement by Dr. Michel, hence I left it in there. And I left a few of his answers as well to the congressman's questions. I will only like to point out that while I agree with Dr. Michel that there should be a competitor to the US dollar, I don't necessarily agree that a private person can just go ahead and create it. This is what makes Bitcoin, and the fact that it was created by an anonymous person or persons, and it grew in the wild being worthless at first until the open source nature and the decentralized nature of it made it a little bit of a competitor on the global scale as potentially money. But I don't necessarily agree that anyone from their home or any business can simply create a currency and then compete based on advertising for that currency to be viable.
Thank you. And now, Dr. Prasad, you're recognized for 5 minutes.
Chairman Barr and members of the committee, thank you for the opportunity to testify in front of you on the implications of digital currency broadly defined for the US economy and financial system. I should note that 2 years ago, I faced an important choice one afternoon, whether to spend that afternoon buying Bitcoin, which is not a trivial process, or to start working on a paper about Bitcoin and digital currencies. For better or worse, I chose the latter. So today I have no Bitcoin, but I do have a paper about the implications of digital currency.
Yeah, that's, I'm just going to leave it there. Again, quick comment. I really wish Dr. Prasad bought some Bitcoin instead of potentially writing that paper. And then in a Senate hearing like this, he would not make the mistake of confusing Tether as actually a cryptocurrency or anything other than just another digital form of a dollar, just being traded anonymously until the regulators crack down on it.
Thank you for your testimony. And the chair now recognizes himself for 5 minutes for questioning. Let me just start with this idea of cryptocurrency potentially supplanting or displacing U.S. Federal Reserve notes as the world's reserve currency. And this is for anyone who wants to chime in. With greater use of electronic payments and the advent of digital currencies, do you think demand for U.S. Federal Reserve notes will decrease? And what implications does that have for the U.S. dollar?
I think if you look at why the US dollar is as strong as it is and is in demand as it is, you have to look beyond just the fact that we have a Federal Reserve that prints Federal Reserve notes. We have an economy with strong property rights, especially relative to many other countries in the world. We have an incredibly well-developed, industrialized infrastructure here. And as long as you combine those things and have a dynamic economy, then the assets of that economy, including the money that's predominantly used in that economy, are going to be sought after. So that's what you should focus on if you want people to want our money, if you want people to want to use our money. And there's also a downside to being the world's reserve currency, and that's that we can basically sort of continue the fiction that we can print as much as we want and lend as much as we want. And that's frankly not a good idea. So that's just not the way that I would think of those things.
Anybody else want to comment on that? Let me follow up by basically, well.
Yeah, I'll definitely follow on that. Those were good points. And the one thing that makes something money is confidence. The more people have confidence in a medium of exchange, the more likely they will trust it as a store of value, the more likely they are going to use it. At the moment, the US dollar is not really at threat of being supplanted by a cryptocurrency. However, if it was in the future, the only one that has potential to do so would be Bitcoin. Other countries that don't run as responsible monetary policy are certainly at risk of potentially being replaced by their citizens for something they consider to have more confidence in. Bitcoin has been with us for about 9 years, and it's starting to pick up a lot of confidence from the population to be used potentially as money and a medium of exchange and a store of value. On the other hand, all considerations that a central bank would launch a cryptocurrency do not really make sense because, once again, as I said in the opening statement, the three facets that Bitcoin provide that are different than the current fiat currencies provided by government is, one, it has a programmable it has a programmable fixed supply, and we know the inflation rate, which is decelerating, and in about 4 to 8 years, there will be less Bitcoin being created per year than additional gold being mined in the ground. So that provides people a safe store of value that they know the monetary policy will not change. And the other two are unconfiscatable value storage when properly held. And the third one is unconfiscatable value transfer. Unless a government's federal currency is going to offer any one of these three elements, it's not really going to make any difference. The government could easily eliminate the paper money, and they now have a digital token. However, it will not compete with Bitcoin on those properties, and mining and the spending on electricity is needed in order to provide those properties. But yes, for the time being, as long as the US government continues to run a responsible monetary policy and the world continues to trust the US dollar more than any other currency, the US dollar will remain the world reserve currency.
By starting with a more kind of fundamental question, you talked about the volatility of digital currency, and maybe that is the principal reason why it's not the best medium of exchange right now or store of value. But at its very core are cryptocurrencies money? And I invite anyone to chime in on this. And if not, if cryptocurrencies are not money, do they substitute as money? Do they function as money substitutes? And my time's about right.
So, correct. Right now, the value of a Bitcoin is pretty volatile, so it is not the best medium of exchange. However, even though Bitcoin has been volatile throughout its history, it has been the best store of value over the last 8 years. Even when the price of Bitcoin does go down for an extended period of time, it still stays above its prior peaks of prior price bubbles. And I believe that it will continue to do so because of the 3 properties that have already been mentioned. So right now, it is a much better store of value than a medium of exchange. But as the rails that allow it to be a better medium of exchange continue to advance with the programming of the underlying technology of Bitcoin, and with more value being placed on Bitcoin due to the confidence in Bitcoin as money, then once the value of one Bitcoin is significantly higher, the volatility on small priced items will be negligible, and therefore it will become a much better medium of exchange.
Ready to expire, but would its properties as money improve? Would its quality as money improve? Would its volatility decline based on adoption rate? Is adoption rate all that is required to improve its qualities to get to money?
Once again, it's not necessarily the adoption rate. It's the confidence that Bitcoin could be the best store of value and the best medium of exchange in the future. So once that happens, the value of one Bitcoin will go up, and therefore the volatility of the price of Bitcoin on goods, on smaller goods, will be negligible. And as the value continues to rise, the volatility of the goods of higher value will also slowly start to be negligible.
My time is more than expired. I will now recognize Dr. Foster for 5 minutes.
Thank you, and thank our witnesses again. Recently there were reports in the press that estimates of about 20% of all Bitcoin have been lost, which strikes me as implying that whatever government or central bank issues digital fiat currency, if that was a representative number, it would be a tremendously profitable enterprise to be in. If 20% of your cash never came back to be redeemed, and that's in addition to the interest expense if there's no interest paid on these digital instruments. And so it strikes me that whatever country starts doing this and becomes a de facto standard is going to have a permanent cash cow. And do you see anything wrong with that analysis?
Yes, there are a few things wrong with that analysis. One of the reasons why Bitcoin is so valuable and it has gained the confidence of the population as a medium of exchange and a store of value is because there is general consensus that Bitcoin is lost and is not recoverable by any entity, and not even the creator, Satoshi Nakamoto. If there was an entity that had access to the 20% of the Bitcoin that have potentially been lost, the confidence in the system would be lost, and the value of one Bitcoin would very quickly drop. To speak about the interest part of your statement, one of the reasons why, well, there's 2 reasons why people have interest on their current money in the bank, and why they demand interest on their current money in the bank is because of Fed's policy of an average 2% inflation rate per year. So if you don't offer people interest, then they will simply watch their cash deteriorate over time. In addition, banks do lend out the money that the population gives them, and therefore there is a risk component associated with the money you put in the bank, and that risk is compensated for with interest. In the case of Bitcoin, if you are holding on to that Bitcoin yourself, or even if you're holding it on through a multi-sig, or even if you let an intermediary hold that Bitcoin for you, which is not advisable, that institution does not have to lend out your Bitcoin. Therefore, you don't need to be compensated for the risk you take on of the intermediary holding that Bitcoin from a lending perspective, and therefore there is no interest rate component. And because Bitcoin, the amount of Bitcoin is finite at 21 million and is increasing at a decelerating rate, your Bitcoin is expected to rise in value over time because of its scarcity. And therefore, once again, you're not really looking for that interest rate component, because your value, your holding will appreciate a lot more than any interest you could get from loaning out what is finite and scarce.
On the other hand, there have been some concern here that somehow there'd be a big evil government monopoly taking overall banking functions. It seems to me it would be pretty self-limiting if there was no interest paid on these things. An average person would maintain just a convenience level amount of this and not have all of their net worth in something that paid no interest. And so it seems like you just have a reasonable fraction of everyone's net worth usable for short-term transactions. And then they would separately, in a very competitive banking and investment environment, allocate the main bulk of their investments elsewhere. Do you see anything wrong with that analysis? Yeah. And so,
well, it's the same thing. A person would try to hold on to their Bitcoin as safely as they can, and by not risking it in any venture unless they want to, and by knowing that it's safe and it can't be debased and it can't be confiscated, that person should be happy to know that his store of value is safe. So unless he is willing to put that capital at risk, there should be no need to demand interest on that store of value.
The promise of blockchain is that it provides essentially a non-falsifiable ledger that would prevent a lot of malfeasance. I think the kind that you still will, I think, forever be worried about is the business of authenticating the person who has access to move these balances around and operate that system. And that remains an unsolved problem in the digital world, is how you really authenticate yourself for different levels of transactions. And in China,
so blockchain doesn't actually promise anything. The blockchain never promised anything. In fact, the word blockchain is simply a description from the Satoshi Nakamoto's code, where he tried to describe the process of proof of work. He stated that once you solve the proof of work problem during those 10 minutes, you would form a block and you would attach that block to another block. He just referred to that concept as blockchain. From my understanding, in the very early writings, he even referred to it as a time chain. That word was not really all that important to him. The innovation here is the proof of work algorithm, which he developed, that creates this incentive for these big mining operations to spend electricity to process these transactions to earn a reward, a scarce reward, in the form of Bitcoin. And because you need to know that there aren't any new Bitcoin being created, no one is trying to scam the system, no one can double spend these transactions. The ledger happens to be open, so all the transactions are totally public. Now, the players using Bitcoin on both sides, they are what we call pseudo-anonymous. Every single transaction is currently public, but the players do not have to make themselves known. And there are currently many efforts trying to identify the users on both sides. And if the identification of the users on both sides goes a little too far and the community feels that people's normal transactions are at risk of censorship, there will be more anonymity tools programmed in to prevent those efforts.
Which has just massively apparently adopted digital transactions for consumers, at least. Is that essentially an account balance with the two big players whose name I forget, Alipay and whatever the other one is. So these are essentially, everyone has a balance on there and I pay you by transferring some of my balance in Alipay to you, or is there some government operation behind it or central bank operation behind it?
So Alipay and WeChat and other entities that are in China becoming very popular for value transfer, they are not much different than PayPal. PayPal can connect to your credit card, PayPal can connect to your bank, and PayPal itself does have a banking license, so you can store your US dollars in PayPal directly with PayPal and then spend them peer-to-peer or with businesses. All of these operations in China are not much different than that. They are still using government fiat currency that is still being held either at a banking institution directly or with an institution that has been given the green light by the government to hold other people's money and allow it to be moved from one person to another. This is very, very different from the decentralized nature of Bitcoin that removes all of these third parties. But in order to do that, it can only function in its own native currency, which is Bitcoin.
Gentlemen's time has expired. The chair recognizes the vice chairman of the subcommittee, Mr. Williams from Texas.
Thank you, Mr. Chairman, and thank all of you for today's hearing. We're in the exciting first stages of the digital currency movement's adoption by mainstream stakeholders, and it's become apparent to many that blockchain and other new technologies is the digital currency space, offers solutions that have the potential to drastically alter the financial sector that does business. As Congress and regulators determine how best to treat these emerging products, we must be mindful of the impact our actions have on innovation and the free enterprise. At the same time, however, it's important that policymakers keep in mind the legitimate governmental interest in preventing the use of anonymous digital currency by those who wish to do us harm. I look forward to discussing with the experts today on the best path forward. So my first question, Dr. Michel, is you state in your testimony that Congress should work diligently to eliminate tax and other legal impediments to the development of alternative currencies as well as new applications for blockchain technologies. What are the impediments to development of alternative currencies, new applications for blockchain technologies? What can Congress do about them?
I think the main one, honestly, I do believe is capital gains tax. The fact that you have to keep track of basis in every single transaction you would make, that's a major impediment to using anything other than the US dollar for your transactions. So that's the biggest one. Otherwise, on a regulatory side, I think if we look at BSA, Bank Secrecy Act, anti-money laundering laws, ensuring that nothing is treated differently. Yes, it is true that criminals have used Bitcoin, but criminals also have used airplanes, computers, and automobiles. We shouldn't criminalize any of those instruments simply because criminals use them. Those components, I believe, are the main barriers to using to a more widespread adoption of these things in the US.
Thank you.
So I agree with Dr. Michel on this one. High taxes are a general problem. And right now, with Bitcoin and other cryptocurrencies, whether I believe they are legitimate or not, this does create a bit of a burden. At the moment, there is a large appreciation in Bitcoin, but if Bitcoin is to become a global leader and a competitor to the US dollar in form of store of value and payments, the speculation and the fluctuation of Bitcoin will probably be lower by a lot. So at the moment, while the government will enjoy a huge windfall in the form of taxes based on capital gains, it is one of the ways that it's preventing its society from being able to utilize a potentially better medium of exchange and a better store of value, which will add lots of wealth to the society itself. And when people in the society have more wealth, they are able to innovate more, they are able to run their companies better, and the entire economy should greatly improve. So I do agree with Dr. Michelle on that one.
The next question is Dr. Garrett. Your testimony presents three options for consumers in the event that cash is no longer available to them. Number one, use commercial bank deposits for everyday transactions. Number two, demand direct access to digital central bank issued money. And thirdly, turn to privately issued cryptocurrencies. So what would cause consumers to choose options 2 and 3 when option 1 is an existing familiar technology that is already becoming increasingly convenient as a payment method? Okay, let me stay with you, Dr. Garrett, with the.
So I believe that options 1 and 2 are very, very similar. Option 1 is our current system where the banks are basically almost in charge of money. They're in charge of money creation through the forms of loans. They're also in charge of holding your money and loaning that money out. The second option is direct banking accounts with the Federal Reserve, which I don't really see coming. And as other panelists have mentioned, if the federal government, if the Federal Reserve is becoming a commercial bank for the citizens, then private banks will not be able to compete. And you're basically centralizing the power, all the power of currency and money in the hands of the public sector completely. And that would probably drive the third option is people will seek an alternative. Now, there are 2 alternatives. You can go to private money, which is mostly all of the altcoins to Bitcoin, which are pretty much private money. They were created, almost all of them, as for-profit organizations providing money, and that could certainly be eliminated with regulation. Bitcoin stands outside of regulation of the Bitcoin itself. It is a global decentralized form of value transfer and storage. And if the people of a country feel that their government is not being responsible with the money supply and with the way they treat people's use of their currency, they will certainly seek an alternative. Countries like Venezuela and some of the other ones are already seeing this effect happening.
Dozens of digital currencies out there, all with different attributes that make classifications difficult. What is the appropriate framework for us to use if Congress approaches legislation addressing digital currency?
Well, that's a very difficult question.
That's why I ask it to you.
That is a very difficult question. And this is one of the biggest questions we have. There will be another hearing later today, which addresses this to a further degree. When it comes to something like Bitcoin that was created and nobody knew if it was ever going to be valuable, but it was created as a way to compete on the global scale as both a medium of exchange and a store of value, basically the best money the world has ever seen. It becomes almost impossible to regulate Bitcoin itself. You can regulate people that are using Bitcoin potentially, but you can't actually regulate Bitcoin. The U.S. government is currently has struggled with marijuana ban for a long time, the ban on cannabis and marijuana. As much as you can police and ban the use and the purchase of marijuana, you can't police and ban the natural growing of a plant or a person growing a plant. And after a 40-year battle and a lot of wasted money, marijuana is becoming legal. Alcohol in the 1920s had a similar situation. It was very hard to ban and very hard to police, and it eventually became legal. As far as Bitcoin's competitors, 99+% of them can certainly be regulated, especially when the initiative of that digital token was funded by, was created through the efforts of others, funded by the solicitation of money from the public. You can certainly adopt laws on that, but as far as Bitcoin itself, it's going to be very challenging and at the end of the day, impossible and a giant loss of money. Bitcoin is just something you will need to be able to live with.
The chair recognizes the gentleman from California, Mr. Sherman.
It seems like some think tanks demand at every turn that we do things that make the federal government less able to meet its financial obligations. And then they demand that we have an extensive and expensive foreign policy that costs well over $1 trillion. There's no way to square that unless we abolish Social Security and Medicare. We have moved from a gold from 2,000 years ago to drafts and paper currency symbolizing gold, to where the paper currency itself has value. And now, for many decades, what has value is paper that represents the paper. I pay my rent with a check, which represents paper dollars, which as recently as the 1930s could be converted into gold, but can no longer be. We now have an opportunity to disempower the federal government and to move that power to those hostile to it. We need a medium of exchange. We need a unit of value. The witnesses have demonstrated that the dollar is much better at that for honest citizens. But cryptocurrencies offer unparalleled advantages to nations that the US government wants to sanction for their terrorist activities, to tax evaders, and to criminals. Mr. Pollack, what is it seems to be a solution looking for a problem.
Well, not exactly. It's not a solution looking for a problem. There was a problem. Yes, the US government does put sanctions on certain countries, but the citizens of those countries do want to, live the best lives they can. And it becomes maybe not the duty of the people in charge of those countries. They might agree to the sanctions, but in reality, the people of those countries will certainly use their whatever will help them live a more fruitful life, and they will seek all kinds of alternatives. At the end of the day, like you said, at first we did have gold, and then there was paper fiat money representing gold, and now there is simply paper money. And perhaps the world should have an alternative going back to the days of actual gold. And if it doesn't work, then it doesn't work. And the other issue here is that money has continued to be more criminalized just for being money. And as Dr. Michelle said earlier, criminals use cars, criminals use computers, criminals use cell phones. It doesn't mean that we have to ban that technology and see that technology is evil. Money should be no different. Money should be treated like a person's car, like a person's property. And it's not the money that's evil. It's not the medium of exchange that's evil. It's whether the person is doing something good or bad with whatever object he happens to have in his hand or in his digital wallet.
What can an honest citizen not do to store value, to to effectuate a transaction. I can be in the smallest hamlet in rural India and use my Visa card. I've never had a problem paying somebody unless I didn't have the money. So it's a good, we have pretty efficient, mostly digital transfers of dollars every day. What's the problem we're trying to solve? Except for the problem that the narcotics dealers have. But I mean, I've got a means of settlement called the dollar. What is the great failure?
And you have another one called the euro. And
I have many choices.
as you point out, you
150
used to
of them
have
at least.
ounces of gold.
So what problem do I have that they're trying to solve unless I'm a tax evader or a narco terrorist?
I don't.
If people are using Bitcoin for tax evasion, it probably means taxes are a little too high and certainly inconvenient. By making the tax policy simple to comply with and making it convenient and making it reasonable for people, the tax evasion issue would probably not exist. Lots of people were downloading MP3s starting in the very late 90s all the way into mid to late 2000s. And there were two main reasons for that. Sure, one of them was the cost, because your other option is to buy a full CD, even though all you wanted was one song. The other reason was ease and simplicity, because at the time, the only way to actually get an MP3 was through file sharing and having it be downloadable. As technology advanced, it is now certainly a lot easier to listen to one song for a very tiny amount of cost without the potential of getting a virus through downloading. Another concern you mentioned is that you are right. You do have the ability to pay in some rural corner of India, maybe not as easily with a credit card as you think, but the US dollar is a global currency, but you are thinking from a US-centric perspective. If someone from, say, Mongolia ends up going to or some other rural or another not so highly developed country, maybe somewhere in Africa, if that person does go to some rural corner of India, they will not have as easy of a time paying for goods and services. Having a global, trusted medium of exchange and store of value can break so many barriers and create wealth for the entire world by eliminating this inefficiency of having hundreds of fiat currencies around the world. If there happened to be one that is secure, that is valuable, that is a great medium of exchange, that is cheap, that is fast, and that will resolve problems for those that may not be traveling from first world nations.
I don't think we can. First of all, I'm not pushing, as you know, this solution.
I'm trying to illustrate that it is a solution only to the problems of tax evaders, criminals, and terrorists.
But you might, excuse me, you might.
And offers an opportunity for profit by speculators speculating on a currency whose sole value is to help the aforementioned ne'er-do-wells. Go ahead.
You might argue that people should deserve, just as I think Dr. Michel did, and in my written testimony, there's a quote from Friedrich Hayek on this, the freedom to choose the denomination of the transactions they want to.
We should allow people to own guns in many circumstances. But if the sole advantage of a particular gun is that it has a special tape on it to prevent fingerprints from adhering, and you would say the honest citizen who wants to hunt wants to make sure that the deer cannot identify the fingerprints of the hunter, I would say the sole benefit of that particular tape on that particular gun is to facilitate criminals. What other than facilitating criminals and allow people place bets on the value of a criminal tool? I mean, we could speculate the value of burglars' tools. What does this do? What problem does it solve? Can you identify one? Because I can't.
All right, I will go ahead and give this a try. That was a very tricky analogy of having guns that where you can't have any fingerprints. So one of the reasons why it makes sense to Mr. Sherman as to only criminals would use those kinds of guns is because at the moment, a country like the US government with fairly lenient gun laws is considered, there's confidence in the population that the government will not fake a person's fingerprints on that gun for their own advantage. So as long as law enforcement and as long as government continues not to abuse the fact that a user of a gun could be identified with their fingerprints to actually solve crimes, if the population felt that government was abusing the power of identifying people's use of guns through their fingerprints, very quickly someone would probably develop a technology like that to prevent a government's abuse of power of using fingerprints to identify criminals. Or they can just use gloves. It would probably be a cheaper alternative. But and this is how some people now feel with the government's use towards the money. 2% annual inflation rate over the last 100 years has very severely deteriorated the store of value property of money. Bailouts and the printing of money during recessions bothers certain people. And the biggest thing that is starting to bother people is civil forfeiture laws, where government and law enforcement simply have the ability to confiscate money for having money. Another example would be the ability of governments to freeze people's bank accounts, making it almost impossible for them to pay for defense attorneys, and using organizations like IRS to put people away into prison because law enforcement was inadequate to catch them and actually doing a crime. Of course, the most popular and historic case of this would be Al Capone, who ended up going to prison for tax evasion on something that would have been legal 10 years later after he got caught. So these uses of the government with the money tend to drive people to something a little bit different than government fiat. And some countries are bigger violators of people's trust when it comes to money than other governments.
I don't know the extent to which cryptocurrencies are used in this criminal way. I suspect they are some to some extent, but so is cash. And as
Well, yes,
Michelle says, so are a lot of things.
Rifles are chiefly used for hunting. Rifles with designed not to have fingerprints on them are predominantly used for crime.
The gentleman's time has expired, and this time we will ask Mr. Hill for his 5 minutes of questioning.
Thank you, Chairman Barr. Appreciate the time today. Very interesting panel. I was at the U.S. Chamber this morning talking about fintech and the advantages of exploring how blockchain can change business economics and accounting and logistics. Very interesting topic. Today we're talking about something that is the headline, which is constantly chatter about cryptocurrencies. And when I listen to your testimony, I just have flashbacks, not personally, of course, to the 1830s. I'm thinking about wildcat banking when we had no central bank, thanks to President Jackson's insistence that we didn't need that. And every state and every business and every town issued script or currency. I have a book at my house of obsolete script and currency that's a collector's guide, and it's very thick. So help me, Mr. Pollack, understand that why is this any different? I mean, I can't imagine that any one privately issued cryptocurrency could be any more accepted than another in a big picture sense. Why is it not like wildcat banking of the 1830s?
Yeah, Congressman, I think it's exactly the same as I tried to suggest in my testimony.
Thank you for that.
And I agree with that completely. When Andrew Jackson eliminated the second Federal Reserve Bank of the United States, there was 10 to 20-year era of wildcat banking, where every single bank and even businesses started issuing their own currency because that was the only thing that there was. This created a big problem in that, yes, some of that currency was obviously legitimate. Maybe even most of that currency was legitimate when it started. But the biggest problem was counterfeiting, because a person that's not in that town, a person that's not affiliated with that bank, has no ability to know if the currency if the paper currency they were accepting at the time was counterfeit or not, if it was secure or not, if it was actually backed by deposits at that institution or any kind of other backing. This is one of the reasons if my memory serves me correctly, this was the first job of the U.S. Secret Service during that era in order to identify counterfeit, and a majority of all the bills in America ended up being counterfeit because you can just counterfeit a bank that no one's ever heard of with their bills. The current cryptocurrency environment is exactly the same, other than Bitcoin. And obviously, some of Bitcoin's copycats that are trying to be currencies are a lot more insecure and a lot more fraudulent than others, but they all do not even come close to the security of Bitcoin, the stability of Bitcoin, and the potential store of value property of Bitcoin. So the rest of it is the same. Almost all of them are completely centralized, and just like the government eventually cracked down on all of those private currencies and eliminated them for a single US dollar, the exact same thing could pretty much be done in the altcoin and cryptocurrency space. But again, this is what will separate Bitcoin from this wildcat banking reincarnation of the mid 1800s here today. In addition, I would also like to add that, well, actually, no, that's okay. Yes, that is a very good comparison to what is actually going on. Perhaps a lot of these altcoins will fail on their own merits. They probably will technologically, or the world doesn't really want 100 different currencies. There is a reason why the world settled on gold. And if you let all of them go, eventually there will be a single winner. And that winner, almost by default, will have to be Bitcoin, because if it's not, the blockchains are basically fluid store of value, and no one will trust any blockchain for the store of value property if Bitcoin was not able to pull it off. Bitcoin is by far the most decentralized and spread out cryptocurrency we have. So anything else is basically would create a huge advantage for the creators of that private digital currency.
And Dr. Michelle, I think if I remember Article 1 right, coining money is an enumerated power of the Congress, not the Federal Reserve System. Yet in fact, Chairman Powell got the question this morning, like Chairman Powell can decide to do cryptocurrencies at the Fed. Where is all this? This would still be pursuant, obviously, to Congress directing that we do this. And so tell me your views on that legally.
Legally, I hate to venture a guess because they seem to be able to do quite a bit without legislation.
And this is no surprise from your testimony. Yes, thank you.
Yeah, no comment from me as well on that.
But Dr. Prasad, a question for you. You talked about potentially, because of blockchain, truly an innovative area, that potentially you would make some forms of money or credit, I'd say, obsolete, like as account payable receivables, for example. People wouldn't necessarily have as big a line of credit. So you're concerned about future credit creation and open market operations. I assume that's where you were coming from in your testimony. Here, as we had Chairman Powell.
Yes. So basically, if Bitcoin does become this global store of value and the most respected medium of exchange, there may be a problem with the idea of credit. The world has been running massively on credit the last several decades, probably longer than that. Credit has been continuously expanding, but somehow there was lots of innovation and the government and the money system was functioning pre-fiat system back in the 1900s. So the way credit was done back then will probably come back to being now, but it will be a challenge on generating credit through something like Bitcoin versus the current fiat system. But that is a cause for concern way down the line,
Testifying, and I always find the goals of Humphrey Hawkins odd. You have full employment and price stability. So I didn't get to ask my question, and I'll let you have the last word, Mr. Pollack. How is price stability consistent with perpetual inflation, setting a 2% inflation target?
It is not. That's one of the great mysteries of the Federal Reserve, how stable prices, which is actually the term in the act, is consistent with their announced strategy of perpetual inflation.
Thank you.
Correct. And this is one of the problems. And it's troublesome that if a person recognizes that 2% perpetual inflation per year is supposed to lead to stable prices, but somehow Bitcoin, which does not have a 2% perpetual inflation per year, over the next few years, it will be about 4%, but after that, it will be 2%, and it will continue to drop down to almost zero until eventually there is almost no inflation of the Bitcoin money supply, if we are to call it money. So yes, the understanding that 2% perpetual inflation cannot possibly lead to stable prices is what should give you an idea as to why Bitcoin is so revolutionary, because there is confidence and in the Bitcoin environment that it will never be, no one would be able to force this kind of monetary inflation on top of Bitcoin. So Bitcoin could actually give us stable prices, but way down the line when the value of one Bitcoin is significantly higher, and the majority of the people, not only in America, but around the world, agree that Bitcoin is a good store of value and a good medium of exchange.
That's one of the great mysteries of finance. I yield back.
The gentleman yields back from those good questions. And Warren, Dave.
Oh, on a one side comment, I don't understand how the Federal Reserve is responsible for employment in any way, shape, or form.
Davidson, who is now recognized for 5 minutes for the final question of the hearing.
Thanks for the bonus time, Chairman, and thank you all for being here. And I assume you're relieved a bit, so you won't be waiting for us for an hour and a half or two to get back over here. So thank you for your expertise in this. And I think just beginning with the nature of currency, what is our currency? And part of the stability of the US dollar lies not just in the resources of the United States, but in the resources of the world, the petrodollar. Everyone has to settle their current account at some level in US dollars because everyone uses crude oil. And so we have an effective monopoly on settlement there. And it dealt somewhat effectively with the problem of mercantilism involved in gold. So it prevented hoarding because the oil isn't hoarded. Of course, Congress continues to tap the Strategic Petroleum Reserve, so I assume eventually maybe we can find an end. But in the background of that, what creates the stability of money? And I guess I want to get at, in cryptocurrency, we use the word for everything. We use it for crypto securities that are really nothing more than non-voting shares in companies in some cases. This is what the SEC is trying to regulate.
We've established that numerous of these crypto commodities are effectively commodities, but we're not quite sure that they're currencies. Mr. Pollack, you summed it up well by saying there's a big gap between how much is this in Bitcoin. And so I guess that's the question I'd like the panel to explore. Maybe Mr. Michel, would you like to pursue? Dr. Michel?
The question specifically being
The nature of money in crypto. So what would make a cryptocurrency a currency, not just a commodity, not an asset? How do you move from whether it's Bitcoin or Petro coin or Michelle coin, Warren coin?
I like the sound of that one. That's good. If we're talking about a medium of exchange, then what we have is either a currency or a substitute for currency or a substitute for money. If it's all digital, maybe we shouldn't call it currency, but the idea is what is the medium of exchange? And my whole point is that people should be allowed to use whatever medium of exchange that they want to use. The fact that many people think that the Fed is great and the Fed is fine and we should just stick to the central bank that we have, that's wonderful. If nobody else ever believes that way and hardly anybody adopts any alternative form of money, then there's no problem. Nobody's going to use one. But if somebody comes up with something better, then we should allow that to take place because
You highlighted earlier that the government should.
Right. So I have a slight issue with the ending to the statement of Dr. Michel. You're right. Satoshi Nakamoto, whether it's a person or persons, did come up with something better. But the difference right now is that in today's world of the crypto, in today's crypto world, people feel that they themselves can come up with something better, generate a bunch of it for themselves, and then stand on a soapbox or pay a prominent promoter to try and get the world to adopt it for them to get perpetually rich. So while I agree with what he's saying, if there is a better form of money out there than the US dollar or the Venezuelan bolivar, and the citizens of those nations should be allowed to use a currency other than the sanctioned currency of their government if it improves the commerce in that country so that everyone becomes more prosperous. That's just basic economics. Where I do agree with you, Mr. Davidson, is that when this effort is generated by solicitation of money from the general public and relies on advertising and relies on a centralized entity to make the money, then yes, I believe that it is the government's job to protect consumers from the fraud of a random person printing their own money and trying to advertise it as the best use of money or the best form of money in the world.
Shouldn't favor one or the other. Well, we clearly do. We coin the money and we have the official money. We have the legal tender in the United States. Thank you so much. I'm sorry I couldn't get to everyone and frankly, I couldn't get to nearly all my questions, but nearly universal liquidity, I think, is the defining characteristic. And then we can't get to the store of value related to Petro. But thank you so much for your time. Thanks for your indulgence, Chairman.
Thank you for your questions and thank you for yielding back your time. And I'd like to thank all of our witnesses for their testimony today. Again, I apologize for the brevity of the hearing. I think we had a lot of members with a lot of interest, but because of the interruption of votes, we will have to end this hearing a little bit early. But given the fact that digital currencies and cryptocurrencies will continue to have a greater and greater impact on our financial system and the broader economy, I'm sure we'll be revisiting this issue and exploring this topic further in the future. Without objection, all members will have 5 legislative days within which to submit additional written questions for the witnesses to the chair, which will be forwarded to the witness for their response. I ask our witnesses to please respond as promptly as you are able. This hearing is adjourned.
Hey, so thank you so much, guys, for sticking around. This was a little bit different. It would be great if any congressman or any senator and especially the ones that are part of the hearing, will get a chance to watch this. Try to be as respectful as possible. And hopefully I will find the time to do more videos like this later today. I will try and do something similar for the second Senate Congress hearing that took place on the same day, which made things a little confusing as to know which expert spoke in front of which congressman. So once again, thank you so much for watching, and I hope to bring you more videos like this in the near future.